Hello. Hi, good evening, everyone. Hang on now. Okay. Are you guys able to see my slides? Hang on, just give me I just test out the voice and everything. Okay. Okay. Just let me know if you can hear me loud and clear before I start. Yes, can hear. Okay, good. Thank you. Okay, so in that case, then I will just start our events tonight. So thank you for your time for joining us this evening. So my name is William. I'm a marketing and also a dealer executive at Phillip Futures. Okay, so just a quick introduction about our companies before we move on. Okay, so before we start, just a quick disclaimer. So whatever that I share tonight or whatever that our speaker share tonight is mainly for knowledge sharing purpose and it's not a buy and sell call. Okay. So about our company. So Phillip Futures, we are incorporated in October 1995 here. Okay. So we have been in this business for over 25 years in Malaysia. So Phillip Futures, we are subsidiaries of Phillip Capital, where our mother company, Phillip Capital, is based in Singapore and our headquarters is based in Kuala Lumpur. So we have offices around West Malaysia, Sabah, and also Sarawak. Okay, so no matter where you are, if you want, you can contact us at wherever that is convenient for you. We should be able to help you. So, okay. So our company is also a trading and clearing participants of Bursa Malaysia Derivative Bhd. So hang on. Are you guys able to see my slides? Should be yes, right? Okay. Okay. There's some technical error. Okay. Okay. So yeah, with that, we are a legal broker house in Malaysia because we have the CMSL license. So Phillip Futures, we are the first broker in Malaysia that offer online trading platforms for both local and foreign products. So with that, we hang on, no slides. Hang on, sorry. Just let me check why is it I don't have slides? It says people can see my screen. Are you guys able to see my slides? Cannot, is it? Okay. So you guys can see my slides now, right? Okay. So I will just continue. So our company, Phillip Futures, we offer both online trading platform for both local and foreign products. So meaning to say you don't need to log in 2 different platforms for you to trade different products here. So with that, we are the top choices for a lot of professional traders in Malaysia. So I would also like to take this opportunity to say a very big thank you to our clients. If you are listening this, so without you, we won't be able to achieve this. So last year, 2020, we got 3 major awards from Bursa Malaysia Derivative, being the best overall trading participants, the best retail, and also the best institutional, okay, as a first runner-up. So our mother company, Phillip Capital, we have a very wide global network with offices at over 14 different countries. So with that, we offer lots of different products from all over different exchanges. But most importantly, we offer products from Bursa Derivative. Okay, so like CPO, KLCI, they are all from Bursa Derivative, and lots of local traders they actually love these products to trade because they are familiar with it. So for Phillip Futures, our main products is futures, and we have different kind of categories. So the first one will be the interest rate futures. The second will be the indexes futures, or energy futures and agricultural futures. So what we are going to talk tonight is the crude palm oil. So crude palm oil falls under the category of agricultural futures. Okay, and lastly, we will have metal futures. Like one of the very popular will be gold. Okay, so why trade with us? First of all, we offer 24-hour support. Okay, so meaning if you are trading the foreign market and you have difficulties or if you have issues at night, you can call in our dealing line and someone will definitely be there to help you out. Okay, so next we offer the latest market news and also the daily commentary exclusively for our clients. And also, if you need help to find a product that is suitable for you, do contact us because we have a very wide range of product list that is definitely something will be there for you. We will help you to find something that is suitable for you. And we also have this one-to-one coaching session. Like I said, if you are new to futures trading, don't worry, because we have this one-to-one coaching session where we can guide you from what is futures, how to use our platform to place order, or how to understand the basic of the technical analysis. We have all these one-to-one coaching session, so you can let us know if you need us to guide you through. And also for webinars, we do it on a monthly basis, something like tonight. Okay, so it's all free of charge. You just need to go to our website to browse them through to register. It's free of charge. And account opening is also free of charge. So if you are really interested to look at the futures product, the live price feed, we give you live chart in our platforms. Everything is free of charge. You just need to sign in to activate your account. That's all. Okay. So even account opening nowadays, we have online account opening, and also we are the only broker in Malaysia that offers online account opening. So if you want to open a futures trading account, don't hesitate because yeah, it's very convenient for you to do so and it's free. Okay, just a quick one about our platform. So this is Phillip Nova, what we use for our give to our clients, okay, to trade. So Phillip Nova, we have over 90 different indicators. So no matter what indicators you want to use to trade, basically, I believe we will be able to cater it. And also nowadays, it's so popular that traders like to trade directly from the chart, as you can see here. Okay, you can directly buy or sell from the chart. So as the candlestick move, you can place your order. And also, like I mentioned earlier, if you want to trade both local and foreign products, you don't need multiple platforms. Everything can be done under Phillip Nova. Okay, it's a very user-friendly, very easy to use platform. So we also have a demo account. So if you are not familiar, you can scan this QR code that there is some paper trading that you can try out. Okay, how to place an order, etc., etc. So you can scan this QR code to download a Nova demo account to have a look. And also just a quick one about the promotion or the events that we are doing. So at the moment, we have this promotion called the Phillip Star Trader until the end of the year, okay, 31st December. So basically, the more you trade, the higher the chances for you to get all these rewards. We have cash reward, we have prizes reward, we have vouchers reward. So yeah, just start trading and you have the opportunity to win all these award, okay, reward, okay, prizes. So and also if you are interested in account opening, this is one of the best chances here because we have this jump trade with Phillip campaign. Okay, not every time that we have this kind of campaign for new account opening. So you open an account today, as long as you execute some trades, you will get the chances to win, to get these Food Panda vouchers or cash reward. Okay, as long as you initiate the trade, you will be able to get them. So not every time we doing this is because we are sponsored and supported by Bursa Malaysia on this campaign. So yeah, it's very, very, very interesting now. So once again, account opening is free of charge, just to let you know. Yeah, if you are interested, you can scan this QR code to open an account today. Okay, and also some of our media, social media here, we have Facebook, we have Instagram, we have YouTube channel, and also we have Telegram. If you are into statistics, then you can go to our Telegram and search us at Phillip Futures. All right. So basically, that is about our companies here. So and also tonight, I would like to take this opportunity to shout a very big thank you to Bursa Derivative because they are supporting our events tonight. So I would like to introduce our speaker tonight from Bursa Derivative, Nicholas. He is from product development department at Bursa Derivative, and he is a law graduate actually. So it's very interesting to see people from different backgrounds. So let me introduce Nicholas. So Nicholas, yeah.
Hi, William.
Hi, Nicholas. Hang on. Oh, sorry. You. Oh, sorry. Let me make you. I will let you. Oh, wait. Is the. Okay, I'm seeing your slides. Yeah.
Is it in full screen mode?
Yes. Yeah. So
Yep.
Nicholas, can you tell us about the CPO? Okay, you can let us know about something about CPO, and also recently I think Bursa Derivative just launched this new product called the FIFO. Probably you can let our audience know what is the main difference between FIFO and CPO and the FCPO. I think lots of people they have these questions.
Can. Sounds good. I will take everyone through a presentation, and we will cover on the FCPO, briefly on the FCPO as well as the FVPO that was newly launched. Yep.
Okay. Yeah.
Okay. So, very good evening to everyone, all the viewers out there. So my name is Nicholas. I'm part of Bursa Malaysia Derivatives, and today's presentation we will touch briefly on FCPO, the palm complex, and then I'll move on to talk a bit more about the newly launched East Malaysian crude palm oil futures. Hold on, William.
Yes.
The screen is I only see my webcam is blocking my slide.
Oh, but I can see your slides actually. You know now.
Okay, it's okay now.
Okay.
Okay, sorry about that. Yeah, okay, so this is BMD's palm complex product offerings. So we offer the most liquid and successful CPO futures contract in the world, FCPO, consolidating our position as the global center for palm oil price discovery. So as you can see here, the first row, the FEPO, is our newly launched product, the East Malaysian Crude Palm Oil Futures contract. We'll touch a bit more on that in the coming slides. Of course, beyond the FCPO and FEPO, our other palm oil products include the RBD palm oil futures, the palm kernel oil futures, the US dollar CPO futures, the options on CPO futures, as well as the options on the US dollar RBD palm oil. So a bit of background. So there has been a long-standing desire for BMD to approve or include East Malaysian ports as approved delivery points for the existing FCPO contract. But because due to the design of the contract and the physical delivery of the FCPO contract, including all these East Malaysian ports would cause disruption to the existing contract. And so we felt that it would be better to have a separate contract. So of course, underlying this rationale for having this contract is the fact that we notice the East Malaysian CPO market has grown significantly over the years. So it has developed from being a small contributor to Malaysia's overall production to now representing about 45% of the country's CPO production. It provides market participants with an avenue for price discovery of the crude palm oil market in East Malaysia. So the features of the FEPO contract are very similar to the FCPO contract. So each contract is equivalent to 25 metric tons of crude palm oil. Its physical delivery, maturity date is 15th day of the spot month, and then one of the key differences between FEPO and FCPO, it would be the delivery ports. So in the next slide, I'll talk a bit more on the differences. Oh, sorry, not the next slide, the following slide. So just a bit of background on the emerging importance of East Malaysia CPO. As we can see here at the top left bar chart, in year 1995, East Malaysia only contributed 22% of the country's total CPO production. And when we fast forward up to 2020, we can see clearly that East Malaysia has already contributed almost half of the country's total CPO production. On the right, we can see the export of palm products between 2011 and 2020. So since 2013, in fact, when you can see on the bar chart, export of palm-related products by East Malaysia has surpassed that of Peninsular Malaysia. And of course, at the bottom, the price of Peninsular CPO and East Malaysia CPO. So East Malaysia CPO has always been trading at a discount as compared to Peninsular Malaysia CPO. So we can see that the average difference in terms of the price between both CPOs from both areas is around 46 ringgit. So this difference in price actually presents good arbitraging opportunities for traders to capitalize on. Okay, so key differences between FEPO and FCPO. So for FEPO, the trading session starts at 9 a.m. all the way to 12:30 before we close off for lunch break, and then it resumes at 2:30 all the way to 6 p.m. So this is in contrast to the existing FCPO, which actually begins at 10:30 in the morning. So FEPO starts 1.5 hours earlier than FCPO. The second difference would be the ports of delivery. So for FEPO, it will be Lahad Datu and Sandakan, both of which are in Sabah, as well as Bintulu, which is in Sarawak. While on the flip side, FCPO's ports of delivery are at Port Klang, Pasir Gudang, and Butterworth. And then the final difference between both contracts would be the position limits. So the position limits for FEPO are actually half of that of FCPO. So for FIPO, it would be 800 contracts for the spot month, 10,000 contracts for any one contract month except for the spot month, and then 15,000 contracts for all months combined. So we can see here it's quite similar. Everything else is similar with just these three differences. So okay, so FIPO, we launched it on 4th October this week, this Monday. Sorry, is my slide still on full screen mode?
No, your slide off. No, your slide go off already. Yeah, now yes.
Okay, yeah. I don't know what happened. Sorry about that. Yeah. So anyway, yeah, as I was saying, we launched our FEPO contract on the 4th of October. So this is just like a very brief summary of how the trading has been so far. So 27 contracts traded on the 4th of October and the 5th of October. And then yesterday we had 34 contracts traded. So the December 2021 contract settled at 4840, just for everyone's information. And of course, for this new contract, we have certain incentives in place for you guys out there. So the first one would be the 3-for-1 waiver, where for every 3 lots of FEPO traded, you get a waiver of exchange and clearing fee for 1 lot of FCPO. And then at the same time, we have the FCPO, FEPO intercommodity spread credit at 70%. And for those of you who are not aware, the FEPO margin is currently at 5,000 ringgit. So on the launch day itself, we had a launch ceremony. So for those of you who did not participate in that or did not have a chance to tune in during the launch ceremony, you can check out the video replays at that link on this screen. Yeah, FEPO 2021. And of course, we have these are the ticker symbols for CME Globex, Bloomberg, Thomson Reuters, and ICE Data Services for everyone's reference. And this comes to the final slide. So if you're interested in opening a corporate individual trading account, you can go to our website or you go into these useful links over here, speak to one of the licensed futures brokers like Phillip, and also check us out on our social media platforms, LinkedIn and WeChat. Yeah. That concludes my presentation. Thank you.
Okay, thank you very much. Thank you very much, Nicholas. So I will just do a quick summarize on the very interesting part that Nicholas just mentioned. So first of all, FIPO has a lower margin as compared to FCPO of at 5,000 versus 6,000. And the second one, people, I think one of the very interesting is that it starts trading a lot earlier. So it allows us to actually look at the market sentiments earlier, okay, before we know what is going to happen at 10:30. And also the third one, I think very interesting is that, like Nicholas said, the premium the premium between the FIFO and CPO for us to look at which product actually is more valuable to trade, undervalue, overvalue. I think it's a good benchmark for us to understand. Okay, yeah. So with that, thank you very much, Nicholas, once again, and thank you, Bursa Derivative. So now I will have our speakers tonight, David, to share about the crude palm oil, the market outlook, and also the technical outlook. Okay. So yeah, thank you. So David has been sharing all this while on the particularly on the grains market like crude palm oil. Okay. So yeah, let's welcome David.
Yeah, hi. Thank you, William, for the introduction. Just a quick sound check as well as whether can you see my slide, William?
Yes, I can. Very loud and clear, and your slide is in full screen.
Yep, thank you very much. Yeah, just before I start, I'd just like to take this opportunity to thank Phillip Futures as well as Bursa Malaysia Derivatives for inviting me on this platform. And indeed, if you are in the palm oil market, this week has been a very exciting week. Prices have broke all-time high. Never in. I've been looking at the market for the past 9-10 years, and this is the first time in history that we are seeing prices above. If you look at spot month prices, it's actually above 5,000 right now. So it's indeed a very interesting time, especially when it comes to the palm oil market right now. And if you are trading this space, I think one word of advice is, things are going to get very volatile, and you have to be very mindful of your stop loss management. Now, I think in tonight's session, I think it's a very brief session. What I'm going to cover is basically to share with you an overview of where the palm oil market outlook is in terms of fundamental. And I'm just going to briefly also share with you in terms of the technical aspect of it. Okay. Just a very brief disclaimer. I think any presentation here, any opinion is purely based on my personal opinion. It doesn't reflect any opinion by Bursa Malaysia or even in fact by Phillip Futures. And I think dealing with derivatives does involve risk, so make sure you do consult your licensed advisor on your next course of action. Now, I think it's interesting is that, the recent rally that we see in prices, the main question that we can ask ourselves is it going to sustain? If you just look at fundamental perspective, it offers a very different scene. And obviously, when seasonality comes into play, I think palm oil has a lot of relevance. So I think these are the two things that I'll probably be touching on tonight. And I'm probably going to share a little bit on the technical overview of where the market is going to go. And likely, we probably might see further increase in terms of prices. But I think the trend is going to be quite exhaustive towards the end. So just a very brief overview. I think not only palm oil that is watching the all-time high space. You look at other commodities in general. We have seen tremendous rally. Just take for example crude oil. Now if you just look at Bloomberg or even CNBC, everyone is talking about net gas. Those prices there are also very crazy. So it goes to show that the economy generally is going well. COVID-19, although we are in still a pandemic, vaccination is in rapid progress. And I think slowly moving forward, a lot of economies are going into endemic phase, which means that I think demand will gradually start to pick up, and that's going to pose a question to a lot of major commodities. If you just look at some of the major commodities, a lot of supplies are still tight. So with demand, expecting to increase in coming weeks or months, is supply sufficient to meet those demands? And obviously, if supply is not sufficient to meet those demands, then probably we'll see prices going to inch higher. So likewise, we have seen crude oil energy prices like WTI and Brent has achieved almost doubled their price since last year, and palm oil as well. So I think there's no exception that commodities indeed going into a different cycle. May not necessarily be a super cycle, but definitely will see a higher price cycle, and it's going to be here to stay. So I think if you are trading this space or you are investing this space, you have to pay a close attention to, especially when it comes to commodities, because ultimately this will fit into inflation, and I think that's going to cause a lot of I think it will cause a lot of impact in terms of policy changes. So do watch out. Rising commodity prices is going to be something that we have to be careful of as well. to give you an overview of CPO prices, obviously this week we hit all-time high on the Bursa Malaysia BMD prices. You look at October contract on BMD exchange, it has hit surpassed 5,000 for the first time in history. Now, what I want to highlight here is that if you just look at historically for the past 20 years, palm oil price since 2008, we hit a high of about 4,400 at that time. And eventually after the global financial crisis, we saw like stagnant a bit. We went to as low as 1,006 or 1,008, and we have been trading between the 2,000 and 3,000 range for pretty much almost close to 9 years. Now, in 2020 and 2021 is where we see the major rise in terms of prices. And this is mainly attributed to supply not coming on stream. If you just look at Malaysia alone, just early this year, we have a lot of labor issues, or in fact, the last lockdowns, the last MCO, a lot of labor issues are being faced by a lot of plantation companies in Malaysia. So really, I think supply has been very underwhelming. And to top that off, demand has been very robust. Economies are starting to reopen. You look at India and China, both these countries are starting to reopen their economies, and really they are demanding a lot of vegetable oil. So as a result, you have a supply crunch and you have a strong demand. It's going to push prices higher. So what's interesting is that now we are, we are in no hindrance territory, which means that we have surpassed the previous high, and now we are going into the further high. So obviously, right onto everybody's mind is that the psychological resistance is always the 5,000 level. Now this is referring to the benchmark contract, which is the December 2021 contract. So as of today, close is still holding around 4,800, probably a tad 150 points away from the 5,000 psychological resistance. So if you just look at fundamental perspective, it's still very bullish. The trend is still an uptrend. So I think it's just a matter of time where we could potentially breach the 5,000 level again. This is based on the third month contract. And I think signs are showing that, prices will continue to stay elevated. And if you are trading this space, you have to brace for more volatility. So as a trader, you definitely like volatility, because this is where the time of the market, you should be in and out of the market. And obviously when market is in the range, then that's where you get less opportunity. So I think if you have not in the palm oil market, now is the best time for you to start looking and start observing the market. If you're in the palm oil market, do embrace the volatility that we're going to see. I think that's something for us to watch out for. Now, in terms of seasonality, what's interesting is that trading on this palm oil space, it provides you a lot of clarity and transparency. For the fact that Malaysia Palm Oil Board produce a lot of data, and from that data we are able to assess how bad or the situation is in terms of production or even exports or even stocks levels. So the funny thing about trading palm oil is that every single month it does display a seasonal tendencies. Just look at this production chart that I have here. You can clearly see that when it comes to September October period, normally you will see the peak in production. Then thereafter, look at November, December, that's where production starts to decline. This has been the trend for the past 10 years. Now, will this year be different? Now, it's hard to say. But what you can see that obviously August was a month where we clearly record a high production period, month-to-month basis. But September, October figures are showing you that expectations are probably going to show you a decline. So that's worrying. The reason why we worry is that because during this peak period months, production is not rising. And when production is not rising, that shows you that prices is going to stay elevated. Obviously, if production starts coming into the market, then it's a different story. Then prices will tend to adjust. But right now, we don't see that. And if you just look at the past few days' performance, it shows you clearly that the production for September and might be October is going to start to decline. And that's worrying because based on seasonal trends, these are the periods where production tend to go higher, but it's not, especially for this year. There's a couple of reasons that's attributing to this factor. Mainly is because of first thing, we have labor issues that's very ongoing. Obviously, with recent government policies, they do indeed a bit more slack. They're going to give a bit more allowance for the plantation industry in terms of hiring more labor. But nevertheless, I think labor issues is very sticky. You don't have suddenly overnight more 1,000 workers suddenly appearing out of nowhere. So it takes time. And obviously this supply crunch is going to be here to stay. So labor issue is one of it. And secondly, I think if you just look at some of the weather reports, we might hit into the occurrence of La Nina, which means wetter conditions which may affect you going forward. So with this in mind, I think production is going to be quite sluggish this year, and it is something that's going to support prices. Now, you look at seasonality, again, it's worth to highlight September and October usually are the periods where production tend to peak. If September, October is the months where we don't see higher production, then pretty much this year we're going to see lower production, total lower production in Malaysia as compared to last year. So the picture it's trying to tell you is that the market is expecting that the production will slow down going forth and is against seasonal tendencies. And I would say probably this could be a one-off scenario. When it comes to 2022, we should see the cycle go back to normal, which means that production will resume back to normality probably by first quarter of next year. So I think again, this is something, if you're watching this space, you should keep an eye in terms of how production is going to play out in the coming months. So 2021 is interesting. Again, you just look at some of the facts that we saw in terms of data. 2021 in terms of total production, we might be lower than 2020 by close to about 10%, which is a lot. The 18 million mark is crucial to watch. Total production. If this year we are able to produce more than 18 million, then that means production could be on quite elevated basis, so prices will tend to adjust. But if we fall below the 18 million mark, that shows you that this year we are tight in supply, and therefore I think stocks will have to draw down, and that will support prices. So I think supply basis in terms of palm oil, it shows you that we are in a very tight situation, and it will continue for a period of time until we start to see a bit more normality to resume, probably by first quarter next year. So do watch out on this space. I think production will play a very important key in terms of prices going forward. Now, stocks is also another important variable. If you look at it, if you assess palm oil fundamentals, I think stock levels currently are very low. I've not seen stocks below the 2 million mark for quite a long time. So throughout the whole of this year, throughout the whole 2021 COVID-19 pandemic, we saw stock levels for palm oil in Malaysia has stayed below the 2 million mark for quite persistently for almost the first 9 months of the year. Obviously, we saw a huge uptick in terms of stocks levels last month, but I think it's probably a one-off event, and going into September and October period, probably we could see stocks level to start to moderate again, because demand is starting to pick up, and China and India is coming back into the picture. And if you just look at seasonal tendencies again, these are the period where China and India will probably demand more. So going forward, stocks level might still stay below the 2 million mark, and that shows you that Malaysia overall stock levels are still very tight. So given that production is low, stocks levels are low, prices tend to be supported at this point in time. So let's go into exports. Exports, if you just look at demand side, obviously August we saw a sharp decline in terms of Malaysia exports. Its reason being is because you look at Indonesia, they have reduced their tax, so it's more favorable for some of the Indian importers to import from Indonesia rather than Malaysia. But that got adjusted. I think Indonesia hiked up their tax again, and that makes Malaysia more competitive. So probably in the month of September, we should see export from Malaysia to resume its trend on an uptrend, and therefore in the month of September, we probably could see between the circle of 30 to 40% increase month-to-month exports. So again, I think it goes to show demand is likely to be robust. And if you just look at some of the estimates, some of the data that's available on the market, you can clearly see India is starting to repurchase again. We are going into Deepawali season very soon, so India will probably demand a bit more due to seasonal tendencies again. So I think these are some of the factors that will contribute to higher demand for palm oil going forward. So now, just to show you the trend, you can clearly see China and India probably moving into the fourth quarter of the year is where they start to pick up a bit more in terms of their purchase of palm oil. China, for the reason being, is because as they enter into winter season, they probably want to stock up on their palm oil just before the winter starts. And India, on the other hand, when it's going to a major event like Deepawali that's coming in the next couple of months, India will also start to restock on their palm oil stock levels. So this goes to show that, you know, on the demand perspective, it starts to paint you a very bright picture, and that goes to support palm oil prices at this point in time. Now, what is interesting is that just starting of this week on Monday, you know, there's a couple of reports that came out. Obviously, if someone is following the WTI prices, it showed up above 70 US dollar per barrel, and it went close to about 80 US dollar per barrel. That's a sharp increase. That is despite, you know, OPEC Plus agreeing to inject more supplies on a monthly basis. But again, I think market overall still take it, you know, there's definitely more demand compared to, you know, supply situation, especially in the oil market space. So with such a big rally in crude oil, I think that causes a lot of China factories to really shut down some of the factories. And the main factories they shut down is actually some of the processing plants which process soybean into soybean meal and soybean oil. So that caused a bit of shortage in terms of soybean oil in the market. So as a result, I think China government, some of the China traders actually went into the palm oil market to purchase some of the palm oil just in case to compensate some of the loss in the soybean oil due to the shutdown of the factories. So I think this China energy crunch will be something of a plus factor. And obviously, with such a high energy prices, China has a lot of incentive, especially some of the biofuel blenders over there, to blend some of the vegetable oil with diesel as a way to save costs, because with high energy prices, it's going to feed into inflation. So China is a very large commodity buyer. So any increase in commodity prices is going to have a big impact on their inflation numbers. So China government do not want that. So as a result, they have to find ways or alternative to reduce those inflationary pressure. One of the ways is, you know, to reduce the impact of high energy prices is to blend, you know, biofuel with vegetable oil. And in this aspect, you can blend palm oil with diesel. So as a result, I think overall the demand coming from China is going to be quite robust going forward. But obviously, you know, China, again, being a very major buyer, is also very price sensitive. Obviously, prices has broke above the 5,000 level. I think that's where, you know, some of the traders are a bit more skeptical. So do watch out. You know, if any sign of weakness coming from China in terms of their demand for palm oil, I think that's usually should be taken with a bit more caution going forward, because, you know, although we have seen energy crunch to be a short-term thing, but, you know, things can turn sour very fast. So, you know, pay close attention to the developments, especially on the China energy front. And on top of that, you know, India continue to cut their import duties. That's again a benefit for palm oil, which means that, you know, they're going to buy more palm oil going forward. There's also a couple of news saying that, you know, we will expect October India will continue to cut import duties. So that will make palm oil very competitive compared to other vegetable oil. So again, I think India will continue to demand more for palm. And again, I think this is mainly for restocking activities ahead of the Deepawali season. So, you know, with all these factors in mind, China and India growing strongly in terms of the demand for palm oil, I think that's, you know, contributing a positive factor in terms of the overall prices for CPO. Now, on the weather front, again, it's shedding you some positive light. If you just look at these weather models, some of the well-known weather models, it does indicate that, you know, September-October period, we could be entering into a La Nina season, whereby, you know, for Malaysia scene, probably we're going to witness wetter conditions, especially in some of the key growing areas. Whenever you have very wet conditions, it's very hard for the workers of laborers to really go down to the field and harvest oil palm, because when the fields are wet, you know, generally, you know, you tend to slow down your harvesting cycle, and that will affect you in general. So I think La Nina is event phenomenon is going to have an impact in terms of prices. And in fact, if this is you know, increasing, I think that's going to have, you know, really an impact on prices going forward. So do watch out. And again, weather is going to be a very long play. The impact will come probably in the next 2 or 3 months. It's not an immediate impact, but, you know, it's something that we have to be careful of as well. Now, talking about that, it's interesting for us to talk about other alternative vegetable oil. And in this regard, you know, whenever we talk about palm oil, it's good for us to compare with soybean oil. Now, if you just look at the spread between soybean oil and palm oil, it's quite interesting of late. Now, just early June, we have saw soybean oil, rally to as high as 72 cents, per bushel. But if you look at palm oil at that time, it's probably hovering above 4,000. The spread was a very steep premium, which means that soybean oil is trading at a very high premium compared to palm oil, and that was trading about $650 per metric ton. That's a lot. And eventually, it adjusted with the collapse of the soybean oil market. Obviously, both these markets are interrelated. So whenever soybean oil collapses or weakens, palm oil will follow suit as well. Now, what's interesting is that just early August, we start to see there's a divergence. You can see the palm oil start to gain strength in terms of the prices, but soybean oil continue to be weak. There's a couple of factors that attribute this. Mainly is because on the soybean oil fundamentals itself, I think with EPA biofuel credits in US, not renewing, or there's no increase in the credit, so that means soybean oil will not be used much. Palm oil, on the other hand, has a different set of fundamentals. It's on a bullish phase because stocks and production is relatively very low. So the spread has actually narrowed from $650. It narrowed to as low as 180 as of a couple of days back. So it goes to show one thing: soybean oil is relatively cheaper compared to palm oil right now, and palm oil in certain ways is a bit overpriced. And I think traders will start to see these dynamics to play out. So it's crucial to watch how this spread will play out in the next couple of weeks or months. Again, I think both these products are running on their own respective fundamentals. So one should not just trade based on these two bases. But it's worth to take note is that when spreads like this starts to narrow substantially, it goes to show that soybean oil, has a bit more room on the upside, and palm oil, room for the upside will start to get limited. So we have to pay close attention to between these two commodities as well. So the interesting fact is that, in 2008, right before the global financial crisis, we saw the palm oil making an all-time high, together along with soybean oil making an all-time high at that point in time. Now, this time around is slightly different. We saw palm oil hitting all-time high, but soybean oil that is finding it very difficult to inch higher. So it goes to show both commodities are running on different set of fundamentals. Sooner or later, I think soybean oil will play the catch-up, or palm oil will have to readjust itself. So again, I think it's very interesting to watch this space and as to where the developments are going to take us in the next couple of weeks. So again, I think this reiterates the point that the spread between the soybean oil and palm oil makes palm oil to look a bit more expensive because of the premium. From as high as 600, we are right down to as low as $130 per metric ton. So I think that's a very steep discount for the soybean oil market. Now, if you are someone new to the futures market, it is always very important for us to look into the term structure of a particular commodity. So if you look at CPO, whenever we talk about term structure, we actually look at the prices for every single month listed on the Bursa Malaysia exchange. So that means taking the prices right until the 3 years forward. Now, if you just look at every month's prices, it will be interesting to take note is that the front contracts, which means your October, November, December contracts, those prices at those months are trading much higher compared to contracts like for next year, which is January, February, March. Those contracts are trading way below. So it goes to show that the term structure for CPO is termed as a backwardation market, whereby your front month contracts are trading way higher compared to your far month contracts. And it goes to show one thing: the market is in a very bullish phase. Now, obviously, you talk about general economics. Whenever you as a producer, you hold a particular commodity, you want to store a particular commodity for further months prices should be higher because you have to account for cost of storage, your insurance costs, and whatnot. But when market starts to be inverse and it goes opposite, whereby your current prices are way higher compared to farm prices, that shows you that there's a lot of demand in the current month, but there's not enough supply. So prices will have to adjust. So that makes incentive for some of the producers to really push their supply into the current market rather than waiting to push supply into the later months or whatnot. So important for us to take note is that whenever you look into a term structure and when you have a backwardation market, the market is in a bullish phase. Now, when things start to change, when you notice that the contracts in the front month starts to get a bit more neutral, and front month contract starts to increase, that shows you that there's an adjustment in the market. So current market may no longer be bullish, and that could potentially change the market trend or market sentiment altogether. So it's important for us, if you're looking at the palm oil market, for us to identify what is the current market structure. And currently, I think CPO is very clear, it's a backwardation market. So if you just plot it on a chart, you can clearly see, the front month prices are very, very steep. And obviously, you look at, 1 year forward, if you look at October 2022, those contracts are trading way below 4,000. So it goes to show that a lot of market expectation is that next year, 2022, should be a normal year for palm oil market, and prices should adjust, with regards to production coming back to normalcy. I think that's something for us to take into consideration as well in terms of the CPO term structure. Now, technical perspective, if you just look at Heiken SG, which is I always use as probably the entry or exit setup. The current phase in palm oil market is still an uptrend. So obviously, if you are trading in this market, we always want to trade with the trend. We never want to trade against the trend. When you trade against the trend, it is always a hard business to be in. So the current trend in palm oil market is still an uptrend. And if you just look at ADX indicator is basically a technical analysis indicator that identifies the strength of the trend. If ADX is high, that shows you that the strength of the trend is still strong. But when ADX is low, that shows you that the trend is going to be a sideways market. So if you just look at ADX value, it has been declining since late August. And if you just look at in terms of the chart, the prices of CPO has actually been trading a very tight range between 4,000 to 4,400 for close to 2 months. And it finally broke out of that range just early part of this week. And obviously, if you just look at ADX, it's starting to increase. So it goes to show that if the trend still has leg to go, it will go higher. And importantly, to take note, if you are using ADX as an indicator to gauge the strength of the trend, be careful when ADX starts to reduce or starts to go sideways, because that's where the strength of the trend is going to show you exhaustion, and probably we will move into sideways market. So again, I think that the clear cut, the trend for CPO is still an uptrend. Any retracement in the price is always a good entry for you to long. So just early part of this week on Monday, Bursa Malaysia has actually launched a new product called the East Malaysia Palm Oil Futures, the FIPO for short. And obviously, if you just look at volume is gaining traction, and if you just look at in terms as what Nicholas has just mentioned earlier on, because of the earlier opening entry of this product, which is at 9 AM in conjunction with the Thailand opening, it does give a lot of incentive for a lot of traders from both sides of the sphere to really trade on the Bursa Malaysia exchange. Now, if you just track both the East Malaysia and Peninsular Malaysia prices, you can clearly see that Peninsular Malaysia prices tend to trade probably about 40 to 50 points higher compared to East Malaysia. This is mainly due to logistical issue. But it shows you a very strong relationship in terms of their co-relationship price movement. Both are moving in line and in tandem. So I think eventually when volume starts to pick up, we could see an opportunity in terms of arbitraging between both the FCPO and the FIPO contract. And especially when right now we are enjoying the credit spread between the both intercommodity. So obviously, if you are someone that's trading the FCPO space, it's also worth to look at into the FIPO space as well. So going to pretty much the last few slides that I have, I think the key challenges for the market, this is going into the medium to longer term perspective. There's no denying that the Malaysia yield, if you compare to Indonesia perspective, we are facing declining yield for a very long period. I think since 3 or 4 years ago, it is down to productivity. Obviously, there's stocks that because of the current labor issue, a lot of plantation estates are going into automation and whatnot. But again, this will take time. Implementation will always take time. So in foreseeable future, I think Malaysia yield in terms of oil palm yield is probably going to face a very stagnated growth. We won't see much increase in terms of their production level. But what is crucial is that whether some of the key estates will start to replant or put in more automation, and in turn will increase productivity. But for the next 2 or 3 years down the road, I think Malaysia will face a declining yield, and that's going to have an impact on prices. Now, obviously, there's talks in town between the investment fraternity. Everyone is talking about SDG. Just take, for example, some of the Malaysia plantation companies are being affected by sustainable practices. Like for example, US is a market that's very reliant on SDG compliance. So if any of the plantation companies are not in comply with SDG practices, it's definitely going to have an impact. They probably will not want to bring in products that's not SDG compliance. Now, SDG compliance in a sense is good, but if you talk about plantation's point of view, it's always about implementation. Because SDG practices, it incurs higher costs, and really you have to provide more labor costs, because you really have to provide labor's accommodation and whatnot. So I think this is going to be pushing the cost production level for most of the plantation companies into higher level. So prices in the longer run could not reach or could not fall below a certain level, because that's where cost of production is going to be. If you just look at the earlier chart I've shown, you just look at the past 8 to 10 years, the cost of production probably has increased from 1,004 to an average of about 2,000 per ton right now. So costs will continue to increase going forward. And I think weather extremities is something that we cannot even forecast. Even the best weather model can get it wrong nowadays. Those days when you look at weather forecasts, especially from the Australian model, those weather forecasts are pretty much 90% to 100% quite accurate. Right now, those models are doing about 60%. It shows to you that the effect of climate change is getting very persistent, and it's going to have an impact when it comes to oil palm, because it's going to affect your yield, and ultimately it's going to affect prices. So I think this is something that we have to be comfortable with, and we have to accommodate in some of our strategies as well. Last but not least, I think the major key challenges that always palm oil market face is the bad publicity. When it comes to the European market, they always view palm oil as on a negative light, because usage of palm oil is going to harm the trees, it's going to kill a lot of flora and fauna. I think that's again a perception, a negative perception, which we need to address. And it's not a one-day thing, it's an ongoing effort. So with this in mind, that's going forward as an industry as a whole, it's going to face a lot of challenges. But I think definitely with the high price environment right now, it's going to be beneficial for a lot of plantation players, and hopefully that could sustain for a period of time, because cost levels are not going to be very cheap, unlike those days where cost per ton usually is on a cheaper level. So conclusion, I think price is still going to continue to be an uptrend, given that the strong fundamentals I just highlighted. Production is sluggish, stocks levels are low, demand looks like going to be robust. So we have cleared the psychological support at 4,000 with ease, especially we have been trading this level for the past 4-5 months now. So obviously the 5,000 is going to be a psychological resistance. It's a big number to fathom. Now, if you look at the October contract, obviously have surpassed 5,000, but the December contract has about 150 ringgit more to hit the 5,000 mark. So obviously there is a psychological resistance. Now, I personally think that prices will probably touch the 5,000 mark, but whether could it sustain above the 5,000 is a different question altogether, because the fundamentals are still quite bullish at this point in time. Now, as a trader, you have to take note that volatility has increased substantially. If you just look at early part of this year, the daily range for palm oil market is trading probably about 60 to 80 points on the daily basis. Right now, you are probably looking at ATR value between 130 to 150 points per day. That means, you can, if you get the market right, probably a 3,000 ringgit per contract basis in your profit in your pocket. But if you get it wrong, that is $3,000 out of the window. So I think it's important for traders to really be crucial at this point in time to set your stop loss management and follow it in a very diligent manner, because when markets tend to swing as well, that's where you need to be very careful. So I think that's pretty much what I'll conclude. So I think if you are in this market, remain in the trend, and every retracement is an opportunity for you to ride the trend. Okay, so with that, I think that will conclude my part, and I'll hand it over to William for any Q&A.
Okay, thank you. Thank you very much, David, for the sharing. I think it's very interesting. Now, all of you, you can post out your questions. It's time for Q&A. So if you have any questions about what is happening in the market, in the CPO market, or whatever that David has shared just now, you can type it in the comment box and we will direct it to David. And if you have any questions about the FIFO, the newly launched product, you can also type it in the comment box below. We can try to ask about Nicholas. We can ask Nicholas from Bursa. Okay, so let's start the first questions here for David. Can China blend soy oil instead of palm oil for biodiesel? From Edward.
Yeah, that's a good question. Yes, obviously China can blend any vegetable oil. Obviously, they prefer soybean oil because China is a very big consumer for soybean, and they always need soybean for soybean meal. And soybean oil is a byproduct, so they always want to use the soybean oil to blend with diesel as a way for them to compensate increase in energy prices. But recently, because some of the factories, soybean processing factories, has actually been shut because of the energy crisis that's in China. Energy prices is way over the roof. So I think there's suddenly a shift of over to palm because suddenly the supply of soybean oil is not in the market. So we probably will expect a shift over to palm oil market to compensate those supplies probably in the near term. So to answer the question, yes, you can obviously blend soy oil with diesel and even palm oil for the matter of fact. But right now the situation doesn't favor soybean oil to be blended because factories are closed. So I think palm oil is probably going to compensate the gap.
Okay. So it's alternable lah. Okay. By the way, a question from this is not a diver. It's from Jing Xian. He's asking about Telegram. We will answer you privately on this particular question. Yeah, Jing Xian, about you cannot find our Phillip Futures. We will try to get back to you on this one privately. Next question here. Probably I will divert it to David. David, do you think the recent launch FIFO has a role to play that caused the price spike in FCPO? Anything to do with FIFO, you reckon?
Okay, I think in terms of I will just take it as this is my personal opinion. Okay, I think to certain may not be totally attributable. But I think to some market participants in anticipation of the launch of FIFO, and given that strong fundamentals, probably they want to raise prices, especially in the FCPO market. But I still believe that the major reason for a very big rally is still down to fundamentals, especially for the FCPO market.
Actually, be it in East Malaysia or be it from West Malaysia, I think the fundamentals are pretty much the same. It doesn't change that the palm oil is produced in Sarawak or Sabah, that the fundamental is different. Yeah, I think that I hope that can solve a lot of traders' question, because for me as a dealer, I get a lot of this question as well, whether FIFO actually affects CPO. Okay, so next question here, I think I will direct it to Nicholas. So Nicholas, there is someone asking, so the bid and ask spread from FIFO since launching has been pretty wide. Is there any advice for retailers to participate in FIFO because of the wide spread in between, and also how long do you foresee for the bid and ask spread to narrow in FIFO for retailers to participate?
Yeah, thanks for that question. Yes, of course, since the contract is newly launched, I think even though we have market makers, they are probably a bit more on the careful side, with a bit more patience. And I think when, and of course, this week was the Golden Week in China, of course, so the Chinese markets, they were closed. So hopefully next week, when people are more familiar and our market makers are more familiar with the contract as well, we are confident that the bid-ask spread will certainly narrow.
Okay, good. So yeah, hopefully we can see that happen. So next question is direct to David. So what are the key indicators do you use to trade CPO from Hao Qing?
Yeah, okay. I'm not sure whether the participant has followed some of my webinars that I conducted with Phillip Futures. Now, in most of the webinars, I've been talking about using Heiken Ashi as alternative to candlesticks, Japanese candlesticks. Heiken Ashi will tell you whether the trend is still going to be uptrend or the trend is going to show you exhaustion. So Heiken Ashi is one of a very good indicator. Couple that your moving averages crossovers, and just before that, I was showing you the ADX. Also, is a very good indicator to be part of your trading arsenal, because that will show you whether the strength of the trend is still going to be strong. If the trend is not going to be strong, then you better be careful. So if you are someone that's holding long position and in an uptrend, when ADX starts to show you that the strength is weakening, that's where you should be taking your positions out or take a profit at this.
Okay. Thank you, David. So next question here is about I think it's about a question from Roger. So he has been monitoring CPO market yesterday and today. Okay, he is asking you, based on yesterday and today's price movement on the FCPO December contract, do you think the CPO market shows sign of exhaustion for now?
Yeah, that's a good question. Yeah. Okay, so if we just look at December 2021 contract, when I was observing the outright contract, so if you just look at it hit as high as I can't remember the exact number, is 4880. Then market will probably trading between the range of 4850 as low as 4008 to today's low, even break 4008 as of the late afternoon. But it rebounded back again to 4840. So it shows you, based on this candlesticks formation, it shows you like a double top. So it's crucial for tomorrow or the day after. If prices doesn't break that top, likely prices is going to stay below, and it will test the 4,800 again. And if it does break, then probably you're going to go down to 4,007 or 4,006. Based on that pattern itself, it does show you there's exhaustion coming in. But again, I think you look at on the daily and weekly basis, the uptrend is still intact. So I think that's how I should see it now. But I think the participant is right in the sense that if you just look at December contract on the intraday basis, it shows you like a double top forming. So it's crucial to watch what tomorrow or the day after is going to play out.
Okay. Even I think for a new high, still need to watch out as well, because a brand new high at 5,000 is still quite expensive for palm oil. Yeah. So do that on the exhaustion setup. Okay. Next question here, I think I will direct to Nicholas. I think it's from BS Yap. Okay. So he is asking this very interesting question. We talk about arbitraging opportunity in FIFO and FCPO here. So since FIFO launched on Monday, he has been monitoring on the prices, and the prices in between FIFO and FCPO is quite on the same level. Okay, like David and you shared earlier that FIFO should trade at a fair discount over FCPO, but so far we haven't seen that discount yet. So how is the arbitraging opportunity going on here?
Yeah, thanks for that question. So, of course, because it's newly launched, just to clarify, I think the discount trading is currently, we can see it in the physical market. Certainly in the future side, one of the rationales of course, having this East Malaysia contract is to ideally provide greater price discovery for the East Malaysian market. So with this price discovery, the price of the FEPO could be closer to that of FCPO if we were to compare it vis-a-vis the physical market. Yeah. So I personally cannot predict how the price is going to be like for FEPO and what would be the difference like, but I think we have to leave it up to the market's forces to determine such a difference in price. Yeah.
Hopefully, when we see more liquidity, there should be some discount over it when there is more liquidity kicking in. Yeah. Okay. Thank you, Nicholas, very much. Yeah. Due to time constraint, yeah. Thank you. I will just take two more questions. Okay. So, David, just now you okay, I will direct this question to David. Is by Hong Keng On. So he is asking, since the levels of shortage has caused the cost of production to go up, do you think the government will assist the plantation owner?
Yeah, I think if we are if you are plantation owners or even the plantation industry as a whole, we are in a very I would say in a very sticky situation in a sense, because on one hand you see prices of your product keep going up. Ultimately, that will translate, is if you're a plantation owner, that will translate profit for you guys. But on the other hand, you cannot even harvest the fruit because you just not have sufficient labor to go down to the field to harvest those fruits. So I think really the crucials, you see, the labor issue has been overwhelming, and if just in general, plantation industry is a very labor intensive industry. If you take those workers out and you don't replace it as soon as possible, you definitely going to see yields going to start to drop. Now, addressing this is going to be long term. It requires government action as well to a certain extent. And I would say all stakeholders really have to sit down, and as I mentioned, the key challenges for the next couple of years is going to be Malaysia declining yield. I think that's going to be a concern. So to address labor shortages, I think is really the government can come into hand and really work with the plantation owners, in a way, sort of like you give a bit of you reduce a foreign labor levy or whatnot, to encourage labor participation. But on the other hand, also you want to encourage domestic workers as well. I think so. Really, you need a multi-pronged strategy for this type of issues. But nevertheless, I think is as a plantation owner, I think you are in a very comfortable situation whereby you're not sure what to do, because you see prices going higher and higher day by day, but you may not have the kind of tools or ability to really reap those benefits.
Yeah. I guess that explains why we are not seeing very strong earnings from the plantation stocks as well. Okay, just one last question we will take and call it a day is from Sam. So David, you share about Heiken-Ashi. Is Heiken-Ashi suitable for intraday trade? To use Heiken-Ashi candlestick
yes
intraday opportunity?
Yeah. Okay. So Heiken-Ashi, if you use it on intraday basis, you have to look at the time frame that you're looking at. If you're using on 30 minutes or that Heiken-Ashi could be quite effective. But if you're using longer time frame, then Heiken-Ashi might not give you that quite accurate signal. So you have to use other indicators to accompany with. But to answer that question, Heiken-Ashi is definitely useful if you are doing on an intraday basis.
Okay. Yeah. Okay. I'm not sure whether is it just me, my line is bad, or because I don't hear. I'm not sure whether the rest lah. Nicholas, can you hear what David shared just now?
Yes,
no?
I can. Yes.
Okay. Okay. Then good. As long as Sam heard what David shared, then it's fine. Okay. So with that, I think we will end the Q&A section today. And thank you very much, David, for your very, very informative section. And also thank you, Nicholas, for the introduction to FIFO. And yeah, hope to see FIFO liquidities to increase for the retailers to participate. Yeah. Okay. Thank you. Thank you very much.
Yep. Thank you for having me.
Bye-bye.
Okay. Stay
safe. Thank you for having me. Have a good night.
Have a good night. Bye-bye.